Hello, Andrew Myriams here from Intuitive Finance. I was asked last week, Andrew, with all the changes that's happened in the last year or two with APRA and the regulatory restrictions and restraints that have been enforced, is there work done yet? I thought that's a really good question. So let's have a talk through what some of the things that have happened. APRA have now been involved in our market for the last 2 years actively in terms of just making sure investors weren't getting ahead of themselves with their lending in certain markets, and Melbourne and Sydney were the predominant forces there where we had the highest populations and growth. How would we keep a balanced market that kept first home buyers able to buy in and also investors not overextending themselves or also overinflating the market? So what we've found in the last couple of years is we've had lower loan-to-income ratios. There's been some talk about that recently where that's going to be the next focus for APRA. And what that means is basically if you earn $50,000, the old rule of thumb when I was first lending was about 4 to 5 times that was your borrowing capacity. So let's say 50,000 on 4 to 5 times, it was 200 to 250,000. It's sort of got out as the markets have grown in the last few years out to 5 and even 6 times if you're an investor. So now people are able to borrow 250 to 300 if they're on that same 50,000 income. So that said, what we saw was some of the lending practices skew a little bit in the favour of investors and investors really buoying the market. We don't want, at the end of the day, we don't want boom-bust cycles. And that's what APRA's job is, to make sure we don't have that type of market where we have highs and lows and the big roller coaster rides. That's not good for anyone. It's not good whether you're invested or trying to invest. That's when you really try to hotspot. So they've tried to give us a more balanced growing market. So what do I think will still happen? I still think in the start of 2018 that there's going to be a little bit more focus on not overextending people, making sure when their interest-only loans expire, that they've got the ability to meet their higher repayments. They're going to really be making sure that everything, advice from brokers, bankers, everyone is being documented, and that clients are making decisions with a sound knowledge and an education that they can go in. There's no doubt living expenses are still going to be high on their radar. So people, if you don't know what it costs you to live, please take a little bit of time to work that out. All of that said, what's the impact on our markets? Well, what we're seeing is Sydney certainly started to reduce with its clearance rates, and a little bit in the last couple of months, CoreLogic data is starting to suggest that the market's even starting to cool with up to 1 to 2% of negative growth. That's not a bad thing. They've had an extraordinary run for the last 3 or 4 years. Melbourne clearance rates are starting to moderate. And while we're still seeing lots of growth and lots of employment opportunities with a lot of infrastructure projects in Melbourne, it's just starting to moderate. So now it's really coming down to the style of property and what you want to be invested in. And in Brisbane, we're seeing some really strong signs for the first time in probably a few years where they're spending a lot of time and effort, the government, on infrastructure projects. And the southeast of Queensland, the Sunshine Coast, Gold Coast and Brisbane markets are really starting to pick up based on the jobs they're able to start to provide. So I think all in all, 2018 is not going to be the buoyant years we've seen in 17 or the first half of 17, 16 and 15. We're going to have reasonable balanced growth, but everyone's going to have to be a lot more stricter with their lending practices. You're going to be asked to provide more information. There's going to be more scrutiny on you in terms of your spending habits and what you've got when your interest-only loans mature. So just be ready. There's going to be more scrutiny, but it's all for a good long-term balanced market. Good luck, have a great Christmas, and we look forward to speaking to you in 2018 wherever we can assist.